Bill Ackman, why you should buy stocks now. Hey guys, today we're going to talk about why Bill Ackman said why you should buy stocks now. Let's get right into it. Bill Ackman, the billionaire founder of Pershing Square Capital Management, spoke briefly on CNBC's Squawk Box about markets and the US economy. Ackman is clearly pleased to see Fed Chairman Jerome Powell doubling down on a plan to keep interest rates higher for longer after criticizing the Fed for not acting aggressively enough in May. Ackman said, "I think they said they're going to do what they have to do, which is raise rates and keep them there for an extended period." He then added, "Our biggest fear was inflation, and that's why we wanted the Fed to raise interest rates." When asked where he sees inflation in 12 months, Ackman said he expects it to fall a lot to 4%, if not 3.5% from a peak of 9.1% in June, which was the highest recorded level in 41 years. He said, "I think inflation is coming off." He then added, "I think people will expect the Fed to ease." Ackman believes stocks will rebound once investors recognize the Fed has won its battle against inflation. He then said, "Once people realize the Fed doesn't have to keep increasing rates and will soon take rates down, that will be a buy signal for markets." This is consistent with Goldman Sachs Group GS 0.29% economist Jan Hatzius's expectation for a soft landing in the United States, which he has written extensively about. Stocks in the United States have fallen this year, as have bonds, in what has been one of the worst years for the markets in decades, according to some measures. So far this year, the S&P 500 is down 17.5%. Stocks fell shortly after the market opened on Tuesday as the European energy crisis and expectations of further central bank rate hikes weighed on investors' appetite for riskier assets. Ackman said Pershing Square's portfolio hasn't changed much since the beginning of the year, aside from the firm's brief investment in Netflix Inc. Pershing Square's most recent SEC filings support this. The firm's portfolio included concentrated bets on Lowe's Inc., Chipotle Mexican Grill, Hilton Worldwide Holdings, Howard Hughes Corp., and Canadian Pacific as of the end of June. If there's anything, Bill Ackman is a man to listen to. The story of Bill Ackman is not one of a man rising from the middle class to a fortune, rather, it is the story of an heir creating his own legacy. On May 11, 1966, William Albert Ackman was born, the son of a mortgage financier and a top New York executive. He graduated from Harvard University in 1988 with a bachelor's degree in history and then went on to graduate school in business administration at Harvard Business School, coming from an affluent and uncomplicated upbringing. After working in real estate with his father for a while, he decided to launch his first hedge fund with Joel Greenblatt in 1992. Despite the fact that he did well with his fund, he decided to close it in 2002. Ackman established Pershing Square Capital Management LP 2 years later with an initial capital of $54 million. Ackman's new fund was an instant success, multiplying the capital received in times such as 2014 and delivering returns of up to 40% annually. Simultaneously, through Pershing Square, he has done significant philanthropic work, primarily in support of children and education. Ackman's investment decisions have always been a source of contention, with his first short move against a bond insurer, followed by a capital injection rescue in favor of a shopping mall operator, becoming well known. The results have also been mixed, with him making moves that earned him $1 billion and bets that cost him $3 billion. Ackman describes himself as an activist investor, looking for large companies with great potential but financial problems that he can solve so that the stock price rises and he can profit from the value appreciation gains on these shares. While he enjoys rescuing good companies with great potential, he also seeks to profit by betting short on companies that he believes are fraudulent in some way. In December 2012, he made public a report accusing Herbalife of operating and promoting a pyramid scheme, as well as offering products that do not deliver on their dietary supplementation promises, defrauding their partners and disappointing their customers. The stock price fell as a result of the report. However, the intervention of Ackman's old acquaintance and rival, Carl Icahn, who bet in favor of the dietary supplement company, caused the company's shares to revalue. Ackman began to take losses on his short bet after spending approximately $50 million on an entire campaign against the supplement company, but he maintained positions in it. As a result of the Herbalife campaign, Ed Markey petitioned the SEC in 2014, requesting an investigation into the company's pyramid practices. As a result, the stock price dropped gradually by up to 50%. This enabled Ackman to cover his short position while not fully recovering his losses. Ackman has had mixed results in his career, with a 58% return on his hedge fund in 2019, contrasting with losses on his short bet against Herbalife. In 2020, he turned $27 million into $2.6 billion in a single transaction, betting on a widespread market decline in the face of the effects of the pandemic that was looming over the world. Bill Ackman remains a highly publicized and contentious figure, and his investment strategy has even drawn the attention of the Securities and Exchange Commission. That's all for today, and we'll be sure to catch you all in the next one.